Mm. Verification of assets. Before beginning the verification of assets and balances, the auditor should obtain the accurate schedule of accounts in a particular format. At physical format, accurate schedule. The following are the steps involved in verification of asset: cash, bank balances, and money at call and short notice. The third schedule of the Banking Regulation Act 1949 requires disclosure to be made in the balance sheet regarding cash, balances with the Reserve Bank of India, balances with other banks, and money at call and short notice. The audit approach and audit procedure is respect of these items are discussed under cash balance with Reserve Bank, balance with other banks, money at call and short notice. Audit approach. Auditor basic objective is verification of these items in their existence and completeness on the date of balance sheet. Audit procedure had to be tailored and meet this. Remember that the cash would be appearance on the balance sheet at almost all the branches. However, in most of the branches in bank, there will be no bank account required reporting except in branches in treasury operation. Most of the branches of the bank, there will be no bank account requiring reporting except in branches and treasury operations. Similarly, the activity pertaining to money at call and short notice is handled by treasury department on the bank at the head office level. Money has robust systems of internal control pertaining to cash, like just custody of two responsible officers, checking it cash periodic interval due to the high risk of misappropriation. Similarly, the balance with other banks in case of applicable branches or reconcile periodically. But we have to satisfy about the effective operation of implementation of internal control in that area. Audit procedure. Area of focus, suggested area of suggested audit approach. Cash, balance with Reserve Bank of India, balance with other bank and other Reserve Bank of India, money at call and short notice. Cash. Carry out the physical verification of cash, including foreign currency, any cash at the ATM, and cash at the bank system as close to the balance sheet date as possible. Cash balance as a physical verification should be agreed with the balance in the cash register and balance in the CBS. Balance with the Reserve Bank of India. Verify the ledger balance in each account with reference to the bank confirmation certificate and reconciliation statement at the end of the year. Review that reconciliation statement, paying special attention to the following items after appearing is in the reconciliation statement. Cash transaction remaining unresponded. Cash revenue items require adjustment written off. Other credit and debit entries originated in the payment be provided that RBI remains unresponded more than 15 days. Balances with other bank other than Reserve Bank of India. Apart from the procedure describing about the examination of balances of the Reserve Bank of India while reviewing the reconciliation statement, auditor should pay a particular attention to the following. Examine that no debit for charges or credit for interest and outstanding and all the items which ought to have been taken as a revenue after the year has been taken. Examine no checks sent or received in the clearing is outstanding. Examine all the bill outstanding checks in for collection and outstanding as on the closing date can be credited subsequently. Examine large transaction in the interbank account to ensure that no transaction has been put through window dressing particulars towards the close of the year. Balances with the bank outstanding India outside India should be verified in the manner described above. These balance should be converted into Indian currency at the exchange rate prevailing on the balance sheet. Money at call and short notice. Examine whether there is a proper system of authorization, general or specified lending of the money at a call or short notice. A complaint to the instruction or guidance known on behalf of the head office and controlling officer branch, including limit of lending in interbank or money market should be examined. The call loan should be verified with the certificate of borrowers and the call loan receipt held by the bank. Examine whether the aggregate balances comparison and shown relevant registered tally in the control accounts as per the general ledger. Examine subsequent repayment of received from the borrowing bank to verify the amount shows under the head as a year. It may be noted that the call loans made by the bank cannot be netted off against the call loan receipt. Verify that the interest has been promptly accrued and accounted for the year and outstanding balances of the call short. Investment. Audit approach. The auditor primary objective of the auditor investment is to satisfy himself as the existence, ownership, and valuation. The examination of complaints with the statutory and regulatory requirement and also important objective in the audit of investment is such a non-compliance may have direct and material effect on financial statement. Later aspect of the assuming special significance in the case of banks where the investment transaction should be carried out within the numerous parameters laid down in the relevant legislation and direction of the RBI. Auditor should keep in the view the designing an audit procedure regarding the investment. Every branch has its own investment policy, which is done strictly in conjunction with the RBI master circulars on investment. The entire complaints need to be evaluated in terms of requirement of investment policy led by the master circular of RBI. Audit procedure. Area of focus suggested area audit procedures. Area of focus. Internal control evaluation and review of investment policies. Suggested audit procedure. Review the investment policy of the bank. Ascertain that the policy conforms in all the material respect to the RBI guidelines as well as to any statutory provision applicable to the bank. It should clearly outline the broad investment objectives separately for investment on its own account and investment on behalf of the customers. Separation of investment funds. Check the segregation of duties with the bank stops in terms of execution rates, settlements, and monitoring of such trades. Accordance with the same internal terms of front office, middle office, and back office function segregation. Examination of reconciliation. Examine reconciliation as investment accounts physically verified with security on hand. Obtain confirmation from the counterparty banks like bank receipts issued by such banks on hand. Obtain confirmation from subsidiary ledger, general ledger, balance with the public debt office, and examine the controls of reconciliation of BR issued by the bank, reconciliation by the banks. Examination document. Ascertain whether the investment made by the banks or within this authority. Ensure that any other convention conditions is restrict the qualify of abridge the rights of ownership and disposal of investment have been completed by the bank. The acquisition or disposal of investment should be verified with reference to the broker contract note, bill of cost, bill of cost, receipt, and other similar evidence. Physical verification. Verification of investment scripts are physically on the close of business on the date of balance sheet. Verify the investment made by the public debt office of RBI custodian depository with the statement of holding as a date of balance sheet. Independent balance confirmation requests were made under say 505. The independent confirmation is not received by alternative audit procedure like getting a bank person to download the investment statement from eCobar from government securities. eCobar CFS platform of RBI auditor presence on screen be designed. Respect of BR issued by other banks in hand with the bank's year and auditor should examine confirmation of counterparty bank with BR. Where the BR has been outstanding for the unduly extended period, auditor should return complete explanation from the management for the reason thereof. Auditor should examine the reconciliation of BR issued by the bank. BR should not be issued in respect of transaction in government securities in which SGL facilities available. In certain securities held by the name of nominees, the auditor should examine whether there is a proper transfer deed signed by the holders or not came from that which is securities are held by the company. Examination of classification and sifting. Examination of entire investment portfolio of bank is classified into three categories: HTM, HFT, AFS. Sifting of securities such as securities norms are laid down policy. Examine whether shifting of investment from available for sale to held to maturity is duly approved by the board of directors of the bank. Examination of valuation. The examination whether the method of accounting policy by the bank in respect of investment, including the year-end valuation, is appropriate. Examine whether the investment has been properly classified into three categories: a time of acquisition based upon such intention as evidence by decision of the competent authority such as board of directors, asset liability committee, and investment committee. Examine compliance with the bank with the guidance of the RBI regarding the valuation of investment. Verify that investments are classified as a non-performing investment. In the case of applicable to RBI guidance, non-performing investment are those interest and principal is remaining unpaid for more than 90 days. In such cases, bank has not to reckon income on securities are required to make provision for depreciation in the value of investment. Examine whether the income of the investment is properly accounted for. The respect assume the special importance of the case where the bank has opted for receipt of income through electronic or online medium. Verify whether adequate disclosure of a change in method of valuation method is made. Examine the profit and loss of sale of investment has been computed in accordance with property. Verify there is a proper system of recording and maintenance of TDS certificate received by the bank. Dealing in security on behalf of us. Examine whether the prior approval of carrying out such dealings has been obtained. Examine whether the banking's income from such activity has been recorded and fairly stated in the bank's financial statement. Consider whether the bank has made material disclosure liability from the breach of its fiduciary duties, including safekeeping assets. Special purpose certificate relating to investment. Examine whether the bank is maintaining separate accounts for the investment made by it on its own investment account, PMS client accounts, on behalf of its constituents, including brokers. As per the RBI guidelines, banks are required to get their investments and PMS separate audited by external auditors. Audit review and reporting. Banks should undertake half-year reviews as 30 September 31st March of the investment portfolio. And these half-year review should not only covers operational aspect of the investment portfolio, but also clearly insight the amendments made by the investment policies and certify the adherence to laid down internal investment policies and procedures of RBI guidelines. The internal auditors are required to separate conduct of concurrent audit of treasury transactions. The result of the report should be placed before the CMD once every month. Banks need not forward copies of internal audit report to RBI. However, major irregularities observed in their reports and positions of complaints that may be incorporated in the half-year review of the investment portfolios. Advances. A third schedule of act requires clarification of advances made by the bank from these different angles. That is the nature of advances like cash credit, overdraft, term loans, bill purchases, etc. The nature and extent of securities like securities by tangible assets are covered by the banks and bank guarantees. And God for making advances, that is whether in India or outside India, further advances in India should also be classified into secretary areas like priority sector or public sector. Audit approach. Advances generally constitute a major part of the assets of the bank. There are a specialized number of borrowers to whom variety of advances are granted. The audit of advances required major attention from the auditors. Auditors primarily concerned for obtaining evidence about the following while carrying out the audit of advances. Amount include the balance sheet respect of advances outstanding at date of balance sheet. Advances present, amount due to the bank. Amount due to the bank are appropriately supported by loan documents. There are no unrecorded advances. The steering basis of valuation of advances is appropriate and promptly applied, and recoverability of advances is recognized in the valuation. Advances are disclosed, classified, and described in accordance with the covenants, accounting policies, and practice and relevant statutory and regularity. Appropriate provision towards advances made by the RBI norms and accounting standards are generally accepted in accounting practices. It will be worth recalling that there is such elaborate detailed control systems and procedures in the banking pertain to appraisal, sanction, documentation, disposal, review, monitoring, supervision of advances. Audit approach of advances should be encompasses the designing approach of audit procedure to obtain audit evidence in all the cases. லைட்டு வைக்கிறதுக்கு மாட்டாங்கல்ல. அஞ்சு நாள் லைட்டு அஞ்சு வச்ச மாதிரி வரும். Area of focus. Evaluation of internal controls over advantages. Adjusted audit procedure. Internal control. Substantive audit procedure. Recoverability of advances. Evaluation of internal control over advances. Examine the area of credit appraisal and verify that the laid down procedures regarding credit appraisal, including non-application, preparation of proposal, obtaining satisfaction about credit worthiness, and borrowings be followed. Examine advances or sanctions according to the delegated authorities. All necessary loan documents has been executed after sanction, but before the disposal may be borrowers. examine the complaints with the stipulated terms of sanction, and in the use of more particular in the case of loan term or term loans. Examine existence of enforcement and the evaluation of security. The aspect of securities record registration examination is also examine the validity of the recorded amounts. Review the operation of accounts and look for adverse features like unauthorized overdrawing beyond limits. Examine whether the system laid down in banks for review renewals for advances is being followed. Review whether drawing power has been calculated properly based on the stock, book debt statements received from the borrowers. Also stipulate in respective sanction law. Ensure compliance with the loan policy of banks as well as in prudent norms of RBI, including appropriate asset classifications are providing. Substantive audit position. Verify correctness of master data for loan accounts updated in the CBS. Check parameter like EMI, rate of interest, year of loan. Verify that each customer of the bank is tagged under a single customer ID in respect of all the accounts, including those which credit facilities granted. Examine all the large advances, while other advances may be examined on a sample basis. Examine the accounts identified to be a problem but which have not yet slipped from NPA Academy. This is done by obtaining SMA1, SMA2 borrowers from the banks and can be considered in selection of problematic accounts. Examine these accounts which have been adversely commented upon among current auditors and internal inspection, RBI inspection teams. We will examine list of reconstruction accounts, ensure that reconstruction as per RBI guidance. Remember, reconstruction accounts or portfolio requires additional provision. Examine the quick early monetary accounting. Any adversely slipper NPA within 12 months of the sanction is called quick or early monetary crash. Verify the completeness and accuracy of interest has been charged. Carry out the appropriate analytical procedure. Recoverability of advances. Review the periodic statements submitted by the borrowers indicate extent of complaints with the terms and conditions. Review the latest financial statements of the borrowers. Review the reports and inspection of security. Review the auditor's reports in case of borrower having credit facility for the banking system beyond the cutoff limit fixed by the board of directors of the bank. Example, the FT Corporation lent housing loan 1 crore to Rahul for this under construction flat. The project is still incomplete and the builder is abscond. In terms of the builder has taken loan from the bank for the entire property and basis on the equitable market. Since equity is not registered, the FT bank was unable to trace the loan taken by the builder and therefore borrower, loan and FT banks both suffered. It will be a better idea first to approve the builder after thoroughly examine the credentials, past performance, and then only consider giving loan to the buyers to the flats to minimize risk. This facts my banks nowadays do it. Nowadays, FT Bank did not take pre-auctions, landed in trouble. Other the civil records of the builders also could be checked. Land sanction should not be become more tick the box. Verification of assets of classification in income recognition and provision of non-performing assets. And income, it is important aspect of the audit for advantages relating to the asset classification and provision. For a provisional norm Chapter 12 of intermediate audit, it implies advances are classified in accordance with the prudent norms of asset classification. Income is recognition, actual record for recovery, and proper provision should be made with respect of advantages where the recovery is doubtful. Audit approach. The Reserve Bank has prescribed objective norms of determining the quantum of provision required with respect of advances. The auditor may download the latest master circular of RBI to familiarize himself fully with the norms provided by the RBI regarding the circulars issued by the RBI. After taking use of master circulars till the date of the audit should also be taken download and reviewed by the auditor for his adherence. However, the norm should be constructed and laid down the minimum provision requiring thereby higher provision warranties contracts of the threat recovery. Such higher provision should be made. With disregard the provision of Section 15 of the Banking Regulation of 1914 should be noted. Section implies that banking companies, nationalized banks, state banks, and regional banks requires a bank counsel to make adequate provision of bad debts and satisfying the auditor before paying any dividends on the share. It may be noted that verifications of applicable prudential norms on the asset classification, income recognition, and provision of the independent responsibility for statutory branch auditor as well as the central auditor. Started. Hmm. Area of focus, classification and provision. I just wanted to question. Verify whether bank is a system of ongoing identification and classification of advances through CBS without manual intervention or an accuracy in crystallizing data of NPA. Examine whether the classification made by the branch is appropriate. Particularly examine the classification of advance where they are threat to recovery. Examine whether secure and unsecure portion of the advance has been segregated correctly and provision has been calculated properly. Review and compare the date of NPA of the loan accordance. Mention the current statements with the previous year reason for the change in period of possession. Accounts regularized near balance sheet date. As per the RBI guidelines, its account has been regularized before the balance sheet date of payment of overdue amount that due genuine sources. Accounts need not be treated as NPA, while subsequent to repayment of the borrower, which makes the account regular. The branch has provided further funds to the borrower, including via subscription to the debentures on the accounts of the borrower. However, should carefully assess whether the repayments was on the genuine source or not. While the accounts integrate weakness based on the data available, then the account should be deemed as an NPA. Another genuine case, the banks must furnish satisfactory evidence to the statutory auditor about the manner of regulation of the accounts to eliminate the doubts of the performance status. It is ensured that the classification is made as per the position of date and hence the classification of all the standard accounts to be reviewed on the balance sheet date. Rate of NPA is significant to determine the classification and hence the specific can't be taken under the recording. NPA should be recognized only based on the concept of past due, overdue concept and not based on the balance sheet date. Drawing power calculation. Ensure that the drawing power is calculated as per the extant guidelines, the credit policy of the banks, formulated by the board of directors of the respective bank and agreed upon the concerned statutory auditor reflected from respective sanction letters. Now, the special consideration to be given to the proper reporting of statutory creditors, stocks, and covered by letter of credit guarantee for the purpose of calculating drawing powers. It should be ensured the declaration stock shall not cover borrower liability outstanding in the form of statutory creditors for the goods covered of the LC guarantee available for the procurement of material. Similar in the case of banks as provide credit facility against primary security of work debts, net value of debtors eligible for trade debtors as per the terms of sanction and this discount is bank. To the arrive it is also ensured that the drawing power is calculated net on stipulated margin. Further, in the case of consortium accounts, the drawing power calculation allocation made by the lead bank is binding on members bank. Drawing power need to be calculated carefully in the case of working capital advances to companies engaged in construction business. Valuation of work is progress should be ensured in consistent and proper manner. You also needed to ensure that mobilization advances being received by the contractor can reduce the calculation of drawing. The stock audit includes audit of books debts would be carried out by the bank of all the accounts having funded exposure of more than a separate time. The reports to be submitted by the stock auditor should be reviewed during the course of audit, and special focus should be given to the comments made by the stock auditors on valuing the securities and calculation of drawing accounts with temporary deficiencies. Bank should not classify an advance account as NPA merely due to existence of some deficiency which is temporary in nature, such as a non-available drawing power based on the latest available stock issue. Balance outstanding exceeding the limit temporarily, non-renewal of limit on due date. However, the stock statements relied upon the banks for determining the drawing power should not be older than 3 months. The outstanding on the account based on the drawing power calculated by the stock statements older than 3 months is considered as irregular, ensuring adherence to the guidelines. Limit not reviewed. Accounts where regularized ad hoc limits are not reviewed within 180 days from the due date or the date of ad hoc sanction. However, should be considered as INPA. Auditor should also ensure that the ad hoc short reviews are not done on repeated basis. In such case, auditor should consider the classification of the accounts based upon the premature and facility of the accounts. Asset classification to be borrower wise, not facility wise. Ensure that the asset classified in the borrower wise, not the facility wise. Therefore, it is to ensure that all the facility granted by the bank to the borrower will have the treat as NPA, not particular facility which is becoming irregular. Further, in-depth arising out of the development of ELC, more guarantees are kept in separate accounts. The outstanding balance should be treated as a part of borrower principal accounts and purpose of application of prudent norms and asset classification, income regulation provision, government guarantee advances. Okay, the government guarantee advances became NPA. Then, for the purpose of income recognition, income on such advance should not be taken as income unless interest is realized. However, the purpose of asset classification, the credit facility backed by central government guarantee through overdue should be treated as NPA only the central government repudiates its guarantee when it's invoked. The exemption is not applicable to state government guarantee advances where the advance is only considered as NPA if it remains overdue more than 90 days. In the case of banks are not invoking central government guarantee through the amount is overdue for long, reason for the same should be taken and duly reported to LFAR. Agriculture advances. Ensure the NPA norms has been applied in accordance with the crop season determined the state level bankers committee each state. Depending upon the duration of crop, short term, long term, raised by the agriculturist NPA norms should be made applicable to agricultural terms loan available to them. To ensure that these norms are made applicable to all the direct agriculture advances listed on the master circular leading to primary sector. In respect of agriculture loans, other than specified in the circular, ensure the identification of NPA has been done the same basis of non-agricultural advances. Provisional towards standard assets. Auditor should check the latest RBI circulars in the record. It is understood the provision of standard assets is not required to be made on various dates in respect of different assets and funded outstanding according to RBI norms as a matter of prudence. The provision need to be checked in details with the statement of advances. The bifurcation of standard advances under relevant category of proper calculation and provision should be checked and certified at the branches level. The definition of respective items specified should be adherence to definition of the RBI. Restructure advances. The restructure is an act which is a lender, economic and legal reason learning of borrowing financial difficulties, grant concession to the borrowers. It may invoke modification of terms of advances including alteration of amount of installment, alternate of repayment period, a rate of installment interest, sanction of additional credit facility, etc. to help to curing of default. RBI has given revised guidelines for treatment of restructured accounts by its circular. Auditor should verify the complaints with the requirement of circulars issued by the recording. Banks may restructure the accounts classified under standards, substandards, and outflow categories. Bank cannot restructure accounts with an retrospective effect. Once the bank receives an application proposed respect of an accounts for restructuring, it implies that the account is intrinsically weak. According during the time of accounts remaining pending for restructuring, auditor need to take a view whether the provision need to be made respect to such accounts and pending approval for this restructuring. One restructuring account will be downgraded from standard to substandard. NPA will remain the same category. Upgradation of account. Examine the accounts upgrade from NPA to substandard category during the year. Ensure that the upgrading meets documents strictly terms of RBI guidelines. There can be possible of incorrect upgradation of accounts on the basis of partial recovery made in the account. An overdue portion might have might not have been wiped completely. There is also a possibility of recoveries being made in the accounts after cut-off date and accounts being upgraded as on the date of merger. Sale purchase NPA. In the case of sale purchase NPA with a bank on the auditor should examine the policy laid down by the board of directors in regarding the procedure, valuation, and delegation of powers, including non-performing financial assets that may be purchased, sold, non-substance purchase, sale, valuation procedures, and accounting policies. Only such NPA sold which has remained NPA in the books for at least 2 years. Others has been sold, purchased without recourse, only that the entire credit risk associated with the non-performing should be transferred to the purchasing bank. Subsequent to the sale of NPA, the bank does not assume any legal, obligatory, or any types of risk regarding to sold NPA. NPA has been sold at the cash basis only. Under no circumstances, NPA can be sold to another bank at the condition price. The entire share consideration has been received on upfront basis. Bank has not purchased an NPA which is had originally sold. In case of sale of NPA, the auditor should also ensure that on the sale of NPA, the same has been removed from the books of accounts of selling banks on transfer. If a sale is at the particular price below the net book value is less provided, the shortfall should be debited to the profit and loss account. The sale of the value higher than NPV excess provision shall not be reversed but to utilize the meet the shortfall or loss on sale of the non-performing ventures. Similar in the case of purchase of NPA, the auditor should verify that the NPA purchase has been subject to the provision required appropriate to the classification status in the books in the purchasing bank. Any recovery respect to NPA purchase from other bank, the first adjusted against the acquiring cost. Only the recovered amount in excess of the cost has been recovered as profit. For the purchase of capital adequacy, the bank has assigned 100% risk weighted to NPA purchase for other banks. Fifth asset. Though Schedule of Banking Regulation Act 1949 requires fixed asset to be classified into two categories in the balance sheet. That is, premises and other fixed asset. Premises are wholly partially owned by the banking company on the purpose of business, including essential purposes used by employees of banks, owners, and of premises. Other fixed asset including furniture, fittings, motor vehicles, computers, office equipment, etc. They were not specifically mentioned under the Banking Regulation 1947, as taken on the lease and intangible asset would be shown as separately for prompt classification and disclosed, and also to comply with the requirement of Section 9 of Banking Regulation Act 1949 prohibits a banking company from holding any more property howsoever acquired. These acquire by way of satisfaction and hold any more properties, whether acquired by or satisfied of claims otherwise. The period exceeding 7 years from the date of acquisition, except as is required for its own use. Audit approach. The most of the banks fixed assets are generally purchased by the head office or acquired in the other use. Central bank auditor is to ascertain the procedure followed and plan accordingly. The most of the banks maintain accounts in centralized head office level. In some branches, information related to purchase, sale, and fixed assets are accounted for help of fixed asset management software. The asset procedures has been designed accordingly. Audit procedure. The carrying out the audit of fixed asset, the auditor is concerned to primarily in obtaining evidence about the ownership. For the purpose, auditor should review the following area of focus: